Most Canadians have no idea that when a loved one passes away, the government takes a cut before the family even sees a dollar. It's called probate, and if you're not prepared, it can eat up tens of thousands of dollars from your inheritance. In this video, we're breaking down what probate really is, how much it costs in different provinces, and the steps you can take right now to protect your family's wealth. By the end, you'll know how to avoid the most common mistakes Canadians make when it comes to estate planning. Number 1. What is probate, and why does it exist? Probate is the legal process of validating a will after someone passes away. It confirms that the will is legitimate and gives the executor the authority to distribute the estate. Sounds fair on paper, right? But here's the catch. This process isn't free. Each province charges a probate fee, sometimes called an estate administration tax, and the bigger the estate, the bigger the fee. This isn't income tax, it's not capital gains, it's a separate cost that blindsides families during one of the hardest times in their lives. Number 2, how much does probate actually cost in Canada? It depends on where you live. Ontario is one of the most expensive provinces, charging about 1.5% of the estate's value. On a $1 million home, that's around $15,000 straight to the government. In British Columbia, it's similar, about 1.4%. Other provinces, like Alberta, charge much less, sometimes just a flat fee of a few $100s. But here's the thing. In high-cost housing markets like Toronto or Vancouver, even a modest family home can mean your heirs are writing a check for thousands in probate fees. That's money that could have gone to your kids, your spouse, or your grandkids. Gone in an instant. Number 3. The hidden traps that make probate worse. Most Canadians don't realize that probate applies to almost everything in the estate: real estate, bank accounts, investments. If there's no beneficiary listed, or if ownership isn't set up properly, those assets get dragged into probate. And here's a painful example. Say your parent adds you to their bank account to make things easier. If it's not set up correctly, that account can still be pulled into probate, creating legal headaches and higher fees. Even joint home ownership can backfire if it's done without proper legal advice. Number 4. How to reduce probate fees legally. The good news? There are ways to plan ahead. Naming beneficiaries on RRSPs, TFSAs, and life insurance policies can keep those assets out of probate. Setting up joint ownership with the right structure can also help. In some cases, families use trusts to pass down wealth while minimizing probate costs. The key is to get advice before it's too late. Once someone passes, those fees are locked in, and there's no negotiating with the government. Probate might sound like just another formality, but in reality, it's a hidden tax that eats away at family wealth across Canada. Knowing how it works and planning ahead can save your loved ones thousands of dollars when they need it most. Stay sharp and stay informed. And if you found this helpful, subscribe for more straight talk on Canadian money and estates.